Hi, and welcome to Elevating Business Value. On this channel, we will be discussing what a business like yours can do on a day to day operational and strategic basis to elevate the business and steadily improve its value. My name is Elsa Brotherton, and I'm the founder of this channel, and I will be discussing different financial aspects and steps that you can take on increasing the value of your business as you are planning and making business decisions. Right now, we are in the month of September, and this is the time of year when many people start asking questions. And those people are both at the leadership and staff level. How is this year looking? What is this year going to look like? How are we going to do for this year? How are we going to end up? What are we planning on doing for next year? And what kind of strategic goals are we going to have? Are there going to be any changes? Are we making any adjustments? What are we going to be doing? And there is a quote that's attributable to Ben Franklin, so I'm sure you've heard it. It's been around for a very long period of time that states, if you fail to plan, you are planning to fail. I've seen businesses at this point in the year that are really just focused on trying to meet year end goals, sales numbers, trying to get the production through, the products out, the services delivered. And they don't want to take the resources or have time for their resources to be spending on doing a budget, doing what if scenarios, trying to figure it out, having these kind of conversations that are not immediately impacting the business, but are regarding the business in the future. And when they look at it, they think a budget's going to change once reality sets in. Once the year starts, this is going to be different. So many businesses just do a cursory kind of view of it all. They just say, you know what, we're just going to increase revenue by this. We're going to keep our expenses the same, and it is what it is. There's not much we can do to change things. We're just going to continue to work hard as we possibly can do. Now, there was a business that I was doing some work for who actually tried to do this. They're like, Elsa, increase the revenue by 20% and increase expenses by X%. And I went through the process of doing that for them. And based on their cost structure, they would have ended up in a position that was worse than what they currently were doing. If they kept their business the same and just repeated it, they would have been better off. It's hard to believe, but it can happen. So, a budget time is actually really important. So, what I would suggest then is instead of looking at this is the time of the year to do a budget, I would replace that term and say this is the time to develop a business financial roadmap. Use this as an opportunity to define what the strategy is for the business and what people actually need to do and be measured by or against to ensure that the performance is in line with the strategy that you're setting at the corporate level. All business activity ultimately is defined numerically. Numbers are not constraints. That is how, unfortunately, many people look at a budget process. They look as numbers as being constraining and confining. Financially, numbers are the numerical translation of a business's activity in response to its business's leadership's direction and in response to the market. So don't view your accounting and finance department as some sort of policing unit, to satisfy banking and IRS requirements, to sort of maybe to put handcuffs on some of the decisions that you want to make, but really as a translator of your actions and decisions. So for this financial roadmap season, to do some planning, I would approach it in the following manner. Know the health of your company by looking at the key performance indicators or KPIs of your company. I did a video session that discussed the difference between KPIs, both at a strategic and operational level. If you have an opportunity to listen to it, I would encourage you to do so if you find that KPIs are still something that you're not completely comfortable with. Actually, they say that 75% of the businesses today really don't know how to incorporate KPIs within their business decision making and planning process. The second thing I would do is identify goals that you have for your company. Identify what the financial requirements will be to meet these goals. And this really comes down to the availability of cash and the use of cash. When is cash going to be really tight for you? Or when will you have a surplus of it? And how can you plan the use of that surplus appropriately? Is it time to make investment? Or will you need that because later on there will be some shortfall and it will even itself out? So that process is very important. Then I would set KPIs at a team and department level that supports the strategic goal that you've set for your company. And these KPIs, I define them as being operational KPIs for those various departments that you have within your organizations or different areas that you have. Some companies have few departments but cover a lot of areas. So, really, these KPIs are in unique, distinct areas of tasks within your business. And then I would set individual bonus and performance goals to support those team KPIs. So if you have a number of employees, setting their performance and bonus to line up with the KPIs that you have at the department level, which line up to the KPIs that you have at the corporate strategic level, puts an alignment of action going from the ground level to the customer and production level to the corporate strategy level. And when you have your monthly discussions regarding the finance of your company, you can incorporate how you're performing into these KPIs. So for this budget season, or better yet, the financial roadmap season, put the layers highlighted above methodically to set the structure for individual behavior, to the department's goals, to achieving the strategic goals that you have for your company. The resulting output was going to be an income statement, a balance sheet, and a cash flow requirements. And this is the destination you're strategically wanting your business to get to. This is the numerical translation of success as you have defined it for your business. During this process, there's a lot of discussion of how to get the business destination plan for the year set. And those conversations at times are not easy. But it's better to have those conversations now and make decisions and come to an agreement before the year starts. Because once the year starts, these conversations will have to come up. And at that time, they'll end up being reactive. You'll be winging it, and there will be confusion. And confusion costs businesses money and time. So remember the famous quote: if you fail to plan, you're planning on failing. So please take this time to seriously step back, look at what you need or want to accomplish from a strategic perspective for next year in terms of the goals for your business, and have those conversations to plan, ask the hard questions, and have the conversation. It's much better to be proactive than reactive. We all know this. It's just setting the time to do it. And look at your numbers, again, as being the numerical translation of individual behaviors as well as market indicators. I wish you great success and continuing on elevating your business's value. Thank you.